So over the past 1 month, we have seen weakness in the Singapore banks, right? DBS, UOB, and even OCBC due to inflationary concerns and how it will impact the economy as well. And of course, we have the US market selling down as well. So what is the outlook right now? Is it time to think about getting in on the Singapore banks, DBS, UOB, and even OCBC? The fact that they have came down by more than 5 to 10% from the recent high. Is it time to start looking at it again? It's time to catch the rebound and load up to prepare for any potential rebound. Hey guys, Joey here, top tier MyZell trader in Phillip Securities, and in this video right here, we'll be looking at the three Singapore banks, DBS, UOB, and even OCBC. We'll look at the chart, we'll kind of do a quick analysis of where we are right now, what are some of the levels whereby you can think about really positioning yourselves, whereby it's really attractive. I think I covered the banks many times over the past few months, and we have sold off after the whole Russian-Ukraine war, very attractive levels. I talked about some of those levels whereby you can think about getting in again, and for those of you who have caught the rebound, congratulations. But it seems like we are approaching to those levels again. All right, so let's think about whether we can get in again, all right, on some of those good levels. And also we'll see how it looks like on my system, if there are any bullish or maybe even bearish signals that have came out over the past 1 month. So let's dive into these three banks right now. So guys, I would appreciate if you can give me an early thumbs up. It will definitely help out the channel, and thank you so much for doing this, right? So this is DBS right here, the first bank that I'd like to talk to you about. It's currently trading about 33.56. So let me just do a quick recap of where we were over the past year. You can see this was in 2021, really strong uptrend, went from like 25, 24, all the way up to like about $37.40. We saw a little bit of a peak here, all right, that's where a bit of a selling actually came back. We broke this $36. Look at this right here, we broke this $36 support level, and that's where the Russian-Ukraine war actually started. But we went down all the way to like the 31 to 32, really attractive support level where I talked about, in previous video as well, and that's where we could see some bargain hunting. So we got rebounded, went up to about 36, and see we are pretty much back down here. So this 36, you can see that it's pretty much the support turn resistance for now, and I would say that would be the cap for now for DBS in the near term, in the mid term as well. That's where if we would hit there again, we can potentially see some selling. All right, but what about the support? This would be the support right here. You can see that support is currently at about the $33. Let me just turn this to green in color. You can see originally it was the resistance. We went back up and we went all the way to the 6, and you can see this is back down again. So $33 would be a good support for now. All right, it's only like about a week. We are still holding above this 33. All right, I think the low was at about $33, right? $33, yeah. I think for like 2 days we kind of like touched the 33.01, and we kind of rebounded. So it seems like buyers are still trying to defend these $33, and also where this blue line, guys, is a 200 days moving average. It's kind of like a longer term moving average. You can see that each time we neared it, right? This was in November last year. We neared it again in March after the Russian-Ukraine war, and now we are near it again. So I think we near this level, of course, near a support level as well, 32, 33. Maybe you can just give a bit of leeway. I think 32 would be a much firmer support. If we can, head towards that 32 to the 3, I think that is where it can be a really good attractive level. Start loading up again, catch any rebound all the way back up to $36. I think that is pretty much the range for now. I think for those of you who have got out like near 36 or maybe even 37, good. That's where you can think about getting in again if you're catching the longer term uptrend, which pretty much still remains intact for now, above this $32, right? So this is DBS right here. Let's take a look at what it says on my 1GT system. All right, so this is DBS on my 1GT system, one good trend whereby it kind of alerts us to counters like this with entry and even exit signals, and guides us on when to get in and when to get out as well, right? So I'm not going to go too far. You can see that pretty much in an uptrend based on this green trend bar right here since like December last year. Look at this right here. I think this was on the 1st of December. We got a kind of like really good bullish signal, started to push all the way up from like about $30.50 all the way to like 35. Got an exit, a new bullish signal, went all the way up, got exit. You can see that this was where we sold off. I think all of you would know that was the Russian-Ukraine war that kind of started, and then we kind of broke some of the support levels, and we actually got a bearish signal that came out, right? So went all the way down, kind of like an exit, and you can see that to rebound. And this is pretty much where we are right now, somewhere around that 33, 39, all right, and this is like the recent bearish signal right here when we kind of broke down this like $35. So yeah, kind of like I have a bearish signal right here. You can see a little bit of a bearish signal. There are no exits, but I think if we can hold above this like $33 for a few more days or a few more weeks, I think this exit signal might come out. And yeah, if we see like a new bullish signal, it can actually lead the recovery, as I say, all the way back to that $36. 36 would be a major resistance that I just talked about just now. Or perhaps if we will to break this 33, all right, then yeah, I mean, I mentioned, right, we can hit to that 32. 32 would be a really attractive level. That's where the blue line, the 200 days moving average is. And I think if you hit to that level, we see some good reversal candles. I think it looks really, really attractive, right? So yeah, this is the system. This is what it says. We have a bearish signal. There are no exits as of now. So yeah, we'll see if this 33 holds. If not, maybe to 32, and then hopefully we see an exit or maybe even a bullish signal, right, that can lead the recovery all the way back up. Okay, let's go on to the next bank, which should be UOB right here, trading at about $31.21, right? So this UOB looks really good as well in terms of the uptrend in the longer term. I talked about it in the previous video. We have kind of broke this $28. Look at this right here. I think I mentioned about this $28, which was a really key resistance level whereby we have consolidated below for like about more than 2 years, right? And when we broke this $28 somewhere in January this year, just a few months back, when we broke this 28, you can see we went all the way up from 28 to that 33, 32, and that's where you can see we consolidated for about a week. And then what happened? We broke this $32, right? We broke this $32 due to the Russian-Ukraine war. Same thing like DBS, we broke and went all the way down to what? We went down to that 28, right? So this 28 was pretty much the resistance turn support, right? We went to that 28, look at this, right? A really good bullish reversal candle, and we managed to trade all the way back up again, and then now we are pretty much back down here again, right? So I would say that the support is very, very key at $28, but I'm really not too sure if we can kind of head back to this $28, right? You can see this is where the blue line is as well, right? That is where the 200 days moving average, right? $28. So I think that's a really, really good attractive level. If we can't break this $30, we might see a bit more downside, all right, towards that 28 to 29. I think that is where some really good bargain hunting can come back again. And for the longer term, those are all really attractive levels to start loading up, to kind of get back in, catch the rebound. All right, so right now I would say that a bit of temporary support at about $30, right? But it's only like a few days, and that is also where the 100 days moving average line is as well. Let me just go to draw this for you right here. Okay, so that would be the $30. After 30, then you can see all the way down to about 28. All right, to $28. So that would become like the support. So 30 first, and then 28. If you are afraid that it might not go all the way to 28, you can try to get some on dips, maybe near 30. That is pretty much the range right now. Let me just go to draw this for you right here. All right, 30 all the way to that 32, all right? That is the range right now for UOB. 30 to 32 is like a $2 range, unless, all right, we break that 30, all right? That's where we can see a bit more weakness to that 28. All right, if not, that would be pretty much the range. Okay, so this is UOB. All right, right now I think it looks quite okay. In the short term, we might see a bit of consolidation here. All right, we'll see if this $30 hold. If it holds, great. If not, I think it can be a really good opportunity near 28 to kind of think about getting in again. Okay, let's take a look at UOB on my 1GT system right here. You can see this was pretty much where we were in October. Got a bullish signal, went all the way up, got an exit, and then we got like a bearish one that came out in November, went all the way down. And it was quite a really good move, I think somewhere on the 8th of December. So I think 8th of December, beginning of December last year, that's where we saw the banks all starting to push up because there were talks about interest rate hikes. So the technology counters were all doing badly, coming down, but the banks were doing well because when there were talks about rate hikes, it will kind of like improve in terms of their net interest margin, their profits and all that, and that's where the banks kind of profited. Push up, right, from this rate hikes news, right? So yeah, we got a bullish signal somewhere in 9th of December. You can see started to push up all the way, got an exit, another bullish signal went up, got an exit, and that's where we started to sell down, right? Just before it sold off, before the whole Russia-Ukraine war started, you can see we got an exit, came all the way down, bearish signal, and eventually we kind of bottomed out when we got like a new bullish signal coming out last month as well. On the 14th of March, went up. And this is where we are. We got an exit right here just a few weeks back, about 2 weeks back on the 8th of April, right? So yeah, pretty much there's no signals right now, no bullish entry, no bullish bearish signal as well, all right? So it's pretty much, as I say, in this consolidation range from that 30 to that $32. I think that is pretty much the range for now. If we can hold above that 30, it's still okay, but if we break below the 30, I think potentially we might hit to the 28, whereby it can still be really, really attractive to get back in, or in terms of the longer term to catch the rebound all the way back up. Okay guys, if you like this video, I would appreciate you can give me a thumbs up. It will definitely help out the channel, and thank you so much for doing this, right? So let's move on to the third bank, and that would be OCBC right here. You can see that OCBC, it looks a little bit different from DBS and UOB, which has been pretty much trying to find new high, and it kind of like sold off, but you know, each time they sold off, buyers are coming out to buy at higher levels, all right, and it kind of rebounded quite fast. But for OCBC, we are pretty much in a consolidation in terms of the mid to long term. Whereas for DBS and UOB, you can see that the longer term trend was quite okay in terms of the blue line, the red line. They're all pretty much pointing up. So longer term trend was looking quite good for them. All right, but for OCBC, look at this, right? The blue line, all right, this blue line and the red line, that means the 100 days moving average and the blue line, the 200 days moving average. You can see that it's not really pointing up, right? I mean, it's like a little bit flat, it's like moving sideways. So mid to long term, we are like in a sideways movement, all right, and the range would be quite clearly somewhere around that $11 all the way up to maybe about like that $13, $13.50. You can see this is like the range. We are somewhere in the center right now, so a bit of a sideways movement for OCBC, all right, with an immediate temporary support at about the $12 right now. That would be the immediate support. You can see this was like the resistance. We broke up here, went all the way up to like $13.50, and of course this was where the Russian-Ukraine war happened. We came down again, all the way down, all right, and you can see when we came down, we broke this $12, went all the way down to this level, right? That would be the next support level, about $11, and buyers started to come back out, right? So that would be the range right now. I think we are right in this range at about $12, right? But it's only it's still trying to attempt to stay above this $12. So I would say that just give it a bit of leeway. I think if we break the $12 and head towards this more attractive $11.50 or maybe even the $11, right? This is where we have rebounded. Look at this right here in December. The Russian-Ukraine war right here in March, we rebounded as well. So I think if you were to approach this $11.50, all right, 11 to $11.50 level, I think that would be a really attractive zone, all right, to start to think about getting in again, especially if you want to catch the rebound all the way back up to that maybe $12.50 or $13 first. All right, so this is OCBC right here, a bit more sideways for now. So you want to think about getting in on dips only if you approach some of those support levels, all right, those really attractive levels, and that's where there's a higher reward to risk. So yes guys, there we have it. I've pretty much covered the three Singapore banks, DBS, UOB and OCBC. Alright, so very quickly, I hope you have a clear idea of where we are right now in terms of the major support or even resistance level. What is the range? What is the trend looking like in the longer term? And how is it different from each of the banks as well? Alright, so I hope you like this video. If you do, make sure you smash the subscribe button so that you will not miss out on any videos like this. And of course, give me a like as well. It will definitely help out the channel. And thank you so much for doing this, right? So let me know in the comments below what is your biggest takeaway or what are your thoughts on the three Singapore banks. Just let me know in the comments below what are your thoughts, what are the targets you think they can hit to, or let me know, right? So I'll do my best to answer each and every comment. Thank you so much for watching. I look forward to see you in the next video. Joey here. Take care.